Alright guys, welcome back to the channel. In this video I'm going to share with you one of the highest probability trade setups and how you can really use this setup to be more aggressive with your position sizing, your stop loss, how you can be more aggressive with your target taking. And if you take notes on this, I promise you, if you implement this into your trading, it's going to allow you to get much higher probability setups. It's going to allow you to build discipline in your trading, be more patient and wait for these high probability moves so you can make more money in your trading. So let's get stuck in. This is the kind of juiciest setup that we've had on for the week. And I want to explain what we're looking at, how much kind of confluence, how we can identify a high probability setup on this, and then how it's playing out, you know, right now. And there's even another opportunity here for you guys who aren't in it, depending on whether or not you can trade a certain system or not. And I'll explain what that is in a moment as we get towards the end of this analysis. So first of all, this, if we're using IPDE, okay, we're identifying what type of trend here. It's bearish, right? We're going from the top left down to the bottom right. This is a bearish trend, and if you're a fan of trend lines and things like that, you can start drawing in trend lines. But this is a bearish trend. We are moving from the top left down to the bottom right, and we're putting in lower lows, and pullbacks. And it's definitely a bearish trend. You can see the exponential moving averages here, which I've got the 8, 20, and 50. They're all fanning out as well, and we're moving down, right? So the question is, when we pull back, well, first of all, where's it likely to go? Well, as a trend continuation trader, we're looking for at least just a test of this low. Okay, so we're not looking for an extension or anything like that, but we're looking to short and take some profits off at the low here, right? Now, decide, how can we decide to get involved? What can we trade that will allow us to get in at a high probability zone? Well, this is where we start to do some analysis, okay? And this is what we started to do later on, earlier on in the week. Now, since we did the video earlier on in the week, or the analysis earlier on in the week, this has become invalidated for some of you, depending on your data of where the market's closed. But what we did is we were trying to basically drill down and see where the highest probability turning point was on this pullback. And we started off, first of all, by drawing on an equal measured move. So if I just quickly clone this, this is known as an ABCD setup. If you're using NinjaTrader, you can shortcut Command 2 or whatever it is, Control 2 on PC. And we can see that we've got that D, completion of the ABCD, completing there at 90.64. All right. Now this still doesn't violate this previous structure high. All right, it still doesn't violate the previous structure high. In fact, the high is technically here anyway. So you can see we pushed into that zone. Yes, we spiked above it, but we didn't close above it. So that's great. So we're still in a valid setup. The next thing we can do is to start building confluence. So what else do we want to look at here? Well, what we can do is we can start looking at things like fibs. So I did a lesson on this earlier on in the week. You can go and watch the video on my YouTube channel. But if we bring on a fib extension and go from this low to this high, you can see we've got that 127 extension right at that level, okay, right at that zone. The next thing we can do with a fib extension is use it as an inversion from the complex pullback low to the initial high of the pullback and back down, and you can see we've got that 1414 lining up in that zone as well. All of the levels that you can see on my fib extension tool are ratios that are powerful ratios that I use in my trading for confluence, okay? The next thing we can do is bring on a fib retracement tool. So if you want confluence of fibs, you go for the previous high, okay, down to the low, and see if there's any confluence there. Now, we didn't have too much confluence there. Had a 618 a little bit lower. So great, right? We're not actually trading off of fibs. We're just trying to see how much confirmation we can get in one tight little zone. All right, so that's great. We've got a 127, we've got a 1414, we've got an equal measured move. But what we've also got, because of that, is a pattern setup. So if you guys are familiar with Gartley setups, for instance, this is what we call a Gartley pattern. And not only is it a Gartley pattern, it's a very deep Gartley pattern, which gives us a completion very close to the X point, because the completion point is at 9057, which is the 127 extension from A to B. So that gives us a real nice opportunity where we can get a tight stop above the high, and we could either take conventional targets of the pattern, or we use the pattern as extra confirmation. We give it, those of you familiar with the CTS, Combined Technical Scoring System, you're giving yourself 3 points for the pattern, maybe 2 points for the ABCD, and then you can look at things like fib confluence to give yourself a point, and you can look at even handle numbers or psychological numbers that you might pay attention to, like 50 levels and even handle numbers. You might look at major structure, so you might draw on a horizontal line here and just bang that into, you know, where we are in our zone, and then go back out to a time frame, maybe the daily, and start looking at how respected that price point is historically. So you can see right here, just in the kind of most recent times, you can see that we've got tests of that level, we've held around that level, so we've bounced off of that level here. So you can see that it's a nice level of structure as well, so that might give you another point. So what we're doing is we're really adding up confluence and confirmation that we're likely to see, or the most highest probability zone for a rollover. And remember, this is all based around not rushing to be in a trade, not being desperate to be in a trade. This is being patient and waiting for the absolute highest probability setup, so we can, if you're adding to your position size, depending on a high probability score, you're going to be able to get the most profitable trades. And it's as simple as that. You're going to be able to risk the least, because you can tighten your stops, because it's got that, that you've got the confidence that we're likely to see a rollover, and you can add to your position size if that's your, you could add to the risk. So there's all sorts of benefits to doing this, right? Now, yesterday, maybe on the 60-minute time frame, you're looking for entries, okay? So you could have been looking for entries up here. We did get a retest at this level. So the retest of structure was on the 2nd of Feb at 9 a.m. UK time. We closed, had the close of the candle here, which would have given you the retest. Since then, we've put in like a little head and shoulders, a sloping head and shoulders, which is another indication that we're likely to see a reversal. So you can see we've got the shoulder, we've got the neckline, we've got a perfect head pattern for a head and shoulders. This is exactly, this is an absolute textbook head and shoulders head. And then we've got the downward sloping neckline, which of course, if we're looking for a reversal from bullish to bearish, a downward sloping neckline is going to be the highest probability setup, right? So look, we've got the downward sloping neckline. We violated the neckline, so there's another indication that we're likely to continue down. Right now, we're putting in a flag, a bearish flag. So look, all of the stars are aligning. This is such a high probability setup for a move to the downside that I don't think there's any more confirmation that we can get that this is the absolute highest probability setup that you could potentially see. It's one of the highest probability setups that you can see. Now, if you're not involved, then you're going to have a way of, it might not meet your trade plan rules. You might not trade flag breakouts. You might not trade head and shoulders. You might not trade double tops. You might not trade pattern trades. But if you're more of a swing trader, even if we just go out to the daily time frame here, you're going to see there was an entry just last night. So I don't know if you guys are familiar with, let's just remove all these drawing tools. If you're familiar with the daily chore, which I teach, I named it after my daily chore when I used to go to the letterbox every day. But the daily chore, this here is a daily chore signal right here. This is a daily chore. We've pulled into the 8 moving average. We've got a high test candle on the daily following 2 bullish candles. We've opened and closed in the lower third of the candle. And we've been triggered into this setup as well. So on my NinjaTrader, I'm actually in this trade right now. This is the Aussie CAD daily chore, and we've got stops above the high here as well. So now we're just in this trade. Okay, now the risk reward profile on this setup is, let's just draw this on. This isn't going to be exact to where my orders are, but it's good enough. a 2.3 to 1 before you take off initial targets. Okay, now some of you just trade 1 to 1, which is fine. You just trade a 1 to 1. That's great. You could do that as well. On this particular setup, because of the confirmation and the confluence that we've got and the high probability setup of it, that it is, we're going for a retest of the lows, and you can change those rules depending on how much confluence you get. So these are some of the things you want to start talking about and thinking about as a trader. How can you become a little bit more aggressive on higher probability setups, but having the discipline to do that and the patience to do that? And then how can you dynamically adapt your position size, your stop loss, and how can you reduce your aggression when it's not a high probability setup, but still get opportunities that allow you to make money in the markets. So hopefully that was valuable. That's probably the most juiciest trade that we've had in a little while, I'll be honest. We do have news out this week. We've got non-farm Friday tomorrow, so you want to be mindful of that. But if you're in this, let's just drop down to the 60. You can see it's already going in our favor. Okay, we actually entered this on the a little bit higher as well on the other account. So this is rolling over nicely. Hopefully we continue down, and if you're in this, good luck. All right, so that's it for the video. Hopefully you enjoyed it. If you did, let me know by hitting the like button and subscribe to the channel if you haven't already. About 75% of the people that watch this channel aren't subscribed, and I'm sharing these on a daily basis. So if you're interested in trading, investing, wealth creation, financial empowerment, check out the other videos on this, and don't forget to hit the notification bell so you're notified when I go live or when I run my show or produce more videos like this. They're all categorized in playlists below, so you can pick and choose what you like, what content you like the most, or what's most relevant to you. And until next time, take care, appreciate you watching, and I'll see you then.